We are back in business, baby. Mark and Jason, Salt and Pepper here. The closing bell, June 7th. How are you feeling, Mark?
How am I feeling? I feel fantastic. It's Friday.
It is
No, I'm feeling
Friday.
good, man. I'm good. My body's breaking down and I can't hardly walk, but other than that, awesome.
Well,
Don't
over
let your
there.
kids hear it, people. Don't let your kids play football. All right, don't do that. No, I'm joking. I
Uh,
mean, it's fun, but it's catching up to me. I will say that.
yeah, well, you still look good, so,
Oh, thank you.
yeah,
So I think
yeah.
it's the white hair, dude. So it's the salt. Preservative.
Well, we had a few weeks off, but it wasn't because we weren't busy. There's some exciting news that we can't share yet, but hopefully in the next month we can share on this podcast and in the newsletter to our clients what's been going on. But one thing we can share, right, Mark, is that we have a new employee. So who's the new mystery employee that we brought on here?
Yeah. So, wow. Okay, good. This is great. So yeah, we got a new employee that we're adding to, uh, Fred Flintstone. No, I mean, no, we got a guy, one of my son-in-law, JD, who's, just a brainiac. I mean, he's so,
Smart guy.
sorry, Jay, but he's
He's
a,
very smart. Very
he's an
smart.
academic guy. Yeah, and it's kind of part of the whole thing of what we're going to announce. But good things happening in Boyer Financial. We're growing, and we got some good opportunities coming up. So we got JD McWillies coming in to be our compliance officer. So we're super fired up about that. He has a long history in teaching. It was a teacher back in the day. Then COVID kind of changed some things, and then he's been in hospitality and
Yep.
with working with Chick-fil-A some, and it's just been we just think he's a great fit for kind of this new phase for us. Is we've grown so much. We need compliance officer making sure
Nice
you're
thing.
uh, you're not front running people. I got to keep an eye on you.
Uh,
So anyway, we're pretty fired up about that. So and you know what? And God's been good to us. We're continuing to grow, and we're excited about the future. Uh, it's good when you have lots of kids, man. You got lots of potential employees to grab, Boyer Financial. But we're even looking forward to the future when we're even expanding outside of family, even though keeping our family business and
Yep.
family oriented business. But yeah, we're excited to welcome JD. So if you call our office and JD answers the phone, tell him hi and congrats. Yeah, so we're excited to have him a part of the team.
Well, he'll definitely be a great addition and asset to Boyer Financial, to us and our clients. So we're excited about it. So welcome, JD.
Yeah.
Um, and then let's just dive into it. A few things this week here. So markets, huh, Mark? Had a resilient week. We had some little bit of downward pressure over the last few weeks here, right? Some pretty heavy down days, but obviously, economy's been resilient. The market's been resilient this week. Dow Jones up over 0.5%, S&P 500 almost 1.5%, and Nasdaq obviously leading the way. The AI craze and semiconductor craze is here to stay. So be it. But up over 2.4% this week, and then so we saw a little bit of some fluctuation right here, Mark, with kind of a rotation in the markets. We had job numbers come out today, a little bit hotter than expected. For May, 272,000 jobs added, nearly 100,000 above the consensus forecast by Bloomberg, which was at 180,000. So wage growth up 4.1, stronger than the 3.9 anticipated. Unemployment ticked up to 4%, which is the
hmm
highest we've seen in some time. But kind of a mixed bag here. So what are you seeing? What are some key indicators you're looking at?
Yeah, I think the consumer again, it's kind of like this deal. We feel like this, that COVID, air pump, threw a lot of money into the system, and I think it's getting close to being over. But I think
Mm-hmm.
this is kind of part of that. The economy continues to be fairly strong. Consumer, even though with higher debt limits and whatever, continue to spend. Um, and so, you get these numbers, and they're not, necessarily interesting that the 10-year yield has actually been coming down here recently because, anticipating rate cuts. And then today happens and it kind of popped up. We're in the 4.4
Yep.
3 range kind of right now with on the 10-year today kind of got popped up. So we've had some rally into the bonds though up until today. And then the stock market, continues to continues to roll forward. So again, I think going back to the beginning of the year, when you have a year like we did last year, where we had a big up and big momentum, oftentimes that momentum carries into the new year. The question will be is if it can continue. Yes, there was job numbers were good. Interesting though, in the bottom, I always notice at the bottom, it's always like, oh, and by the way, job openings, were, there was, there's a little something that says,
Yep.
they downgraded the last 2 months, but nobody's, nobody tells you that. So actually, I think it looks strong on the top. It's kind of funny. Like it feels like, like there's, to me, it's like it looks all calm. It's like that water. You ever hear about those rivers? Like there's places at Colorado River or whatever when it's really rolling, like it looks like really calm. It just looks perfect. But then they say underneath the water, there's things
Mm-hmm.
happening that you got to be super
Yeah.
careful you don't get sucked under. And I kind
Mm-hmm.
of feel like that a little bit. There's a little nervousness to me about like, oh, everything looks great and it continues to but like there's this uncertainty underneath that nobody
Mm-hmm.
sees. There's a slowdown happening, I think, in a lot of areas economically. So we'll see, where that hands out. So that's the kind of feeling I have. Yeah, look, sounds great. Yeah, blah, blah. And then it's like, really? I mean, it's hard to imagine just like living real life when you go to the store every day and you do all the things. It's like, is it really that good? I mean, it's kind of hard. It's hard to figure out. And then a thing you and I talked about is a lot of it's government jobs too.
Yeah.
Again,
Mm-hmm.
continually we're getting government, a lot of this employment is in the government. So, which makes total sense with the administration that we have right now. It's just massive bureaucracy, continue to grow it. And in
Yep.
election year, that's concerning too, because, that makes it, pump up those jobs. It makes it look better than it is. Right. So I'm
Correct.
not saying that's happening, but I'm saying it's, again, your antennas go up and it's kind of like, not really sure. So
Yeah.
I continue to stay cautious and in a way, but being involved, you got to be invested, but you got to just, yeah,
Pick and choose.
make sure you can, if you need liquidity, that you're well positioned for that.
Absolutely. And those are good points. Looking at the job numbers and kind of where we're at. I mean, even with a stronger jobs report, which obviously is bad news from the Fed's perspective, because then they're saying, okay, we're going to pause again at our next meeting. And that just kind of pushes back the time frame of actually getting our first rate cut. European central bank actually cut rates this week, first time 25 basis points. And so, but they're urging caution moving forward. So they kind of beat us to that punch. And you got to remember, they actually had higher inflation to start out with than we did.
Yeah.
And then they actually got it under control a lot quicker for different, obviously, there's different economic factors and levers that were pulled. No two countries are the same there. But my point being is like you said, looks good on the surface, but you look underneath the water, you look underneath the surface, there is some turmoil. 3 out of 4 Americans are living paycheck to paycheck and are having financial difficulty. You have spending on credit into, I believe it's the trillions of dollars. There's over 4 trillion, I believe, and growing in consumer debt. So where is that going to come from? How are we going to pay for not only, how are we going to pay for the government spending, but also how are we going to get out of this hole individually? And then also for all of the over 8 million immigrants that have come over the border as well. I mean, that's just extra government spending to take care of these people as well. So it's just a lot. There's just a lot, like you said, going on. And again, we'll wade through all of that. These aren't political statements. It's just there's got to be money. There's got to be some kind of cash flow to fund all of this. So it's quite interesting.
I'm laughing and crying at the same time watching what's going on. It's crazy.
Yeah.
There's not one of us, okay, that could run our homes and our home finances like our
Yeah.
government does.
Mm-hmm.
But we don't have a spigot that we can just print more money, or make the switch over here to, I don't know. It's just it's concerning, and I think that makes this year's elections huge,
Hmm.
as far as where the direction
Where
of
we're
this country
going.
is going. So we gotta slow down the size of this government.
So I think a lot of people are wondering, okay, so Mark and Jason, you're talking about, economy is resilient, yet there is some kind of, tensions and rough waters underneath the surface, yet the markets are still doing
Yeah.
remarkably well given. So where are we going to go from here? April showers brought May flowers. Markets have placed a greater importance on economic growth and corporate profits, which have been strong, over 10% earnings growth for the S&P 500. Kind of getting away from that Fed interest rate message that we've been talking about the last, year and a half or whatever it's been. So is there anything that we can look at between now and the end of the year? Is there anything in your mind that might stand out? Are we looking at, potential further growth? Are we going to experience some volatility as we get near election season? What should be in people's minds moving forward?
So I just mentioned earlier. So look, nobody knows for sure. I mean, I could have a best guess, and I tell you what, you know this. We get on calls all the time with money managers and people that we know that are really, really smart. Um, I had one like end of last year who, a manager at one of the largest institutions in the world, who
Hmm.
was just pounding on the table that there was going to be at least 5 or 6 interest rate, a bond in a fixed income manager who's highly
Yeah.
regarded, there's going to be 5 or 6 interest rate cuts here in 2024. Okay, so and I've Warren Buffett's famous for saying, I think nobody knows exactly, right? So we are financial advisors, and I got, I tips between being, very, very optimistic, and then there's things that make me very pessimistic. The key is none of us really knows.
Hmm.
It's like going into a game. You can be prepared. You can prepare for an athletic contest, going against a strong opponent, and have watch film and do all these things, right? You have a really good idea of how they play and all their strengths and weaknesses. And then once you get into the game, like I mean, it's play by play. Like you're still going to be consistent with that, and what they're doing, but you're going to have to make adjustments. So the key is to have that balanced attack. We say this all a lot, but
Yeah.
you got to go at this right now. You know, praying for the best, but understanding, that, the worst can happen too. There's a lot of war going on. There's lots of things happening. So that's why, you got elections coming up. There's a lot of emotion in the world right now. And,
Yep.
so all that to say is that stay balanced. That's what our job is to make sure, that you got enough short-term cash to handle, if you're a retirement place and you need income on a regular basis, make sure that you've got places where you can tap into some cash. There's good cash right now. I mean, you're getting still
Yeah.
good yields on short term, right? So all that to say is that's why I think it's really important. A lot of people that do it on their own. Some people can do it, but I think that's why I love being being a financial advisor or a financial advisor or a coach. I mean, that's what we do, is
Yeah.
help people, coach them, look at their situation. That's what we're here to help, and we want to do that because those are important to be prepared for every kind of situation, right? I mean, that's what
Hmm.
that's what we love about this business. Um, yeah, I think elections are going to be a big deal. They're about ready to throw, a former president. There's a really good chance in my mind that they're going to throw him in prison over, some stuff that you can argue is a parking ticket in most cases, that,
Right.
whole bit. So what's that going to do? There's a lot of emotion in the world. Bottom line is, though, it may or may not affect the stock market or whatever, because a lot of that, to your point earlier, it's predicated on earnings, and earnings have been surprisingly still strong. So that's the other side, right? So
Yeah.
corporations are still pretty positive on things. So you can't fight that. You can't fight the corps. I mean, what they're doing and what the earnings per share is really the stuff that we are looking at. So,
Yep.
and
Big
so that
point.
continues to be strong. So, you know, you don't fight the Fed, they say, but I think at the end of the whole stock market is based long term on actually earnings in great
Yes.
companies. I mean, you're in a mix right now with AI and companies like NVIDIA. Like this is
Mhm.
a, we've talked about this so many times. It's a new industrial revolution in a way.
Absolutely.
And so, that coupled with all, you're adding more efficiencies and more money in that place that's kind of spreading out to lots of different areas. So
Hmm.
there you go. So yes, a lot of bad news, but yet there's some really credible news too for
Yeah.
investors. So yeah, have a well developed, thought through plan. That's key right now.
Really like those points that you brought up. And just to kind of go off what you're talking about, like this new industrial revolution, Taiwan semiconductor, which obviously has been heavily affected with the possibility of China's military aggression and taking over Taiwan. They've deglobalizing the supply chain has been happening for the last few years since COVID. So you've got TSM, Taiwan Semi opening factories in Arizona, though it will
Yeah.
take some time to train U.S. citizens to kind of do the job that TSMC did over in Taiwan. But that's some really good news, the deglobalization of all that. But to prove your to
TSM hit another new high today,
yeah.
right?
Do you know why though? Because their profits, they came out, their sales rose 30% to $7.1
Yeah.
billion. So there you go, what you're talking about.
Well, there you go. So
Revenue,
corporations,
earning.
so somebody's buying chips, right? And they're making chips. So somebody's buying all these products that are, so that's what I'm
Mhm.
talking about. You can't fight that. I mean, that's beyond almost, I mean, it's a consumer, but it's deep into the corporations of consume. It's really long-term stuff that's happening here.
Yes.
6 months ago, you and I talking about Taiwan Semiconductor,
Yeah.
it's like, well, they're going
This
to get
could be
attacked by China. China's going to attack Taiwan, and you're talking to clients and there's that concern, and yet, geez, well, I mean, it's just gone from, 100 to 164. So we're up, 64% in the last, since December.
yeah.
I mean,
Yep.
pretty good return. I mean,
Exactly.
so again, you don't know. I mean, that's why great companies, diversification, all that really important as part of the game plan. So, wow.
So just to end here, a couple facts. So, from Memorial Day to Labor Day, we'll look at, between those two holidays, the S&P 500 rises about 1.8% on average between those holidays, with gains 70% of the time. And then, stocks tend to do better the rest of the year as well if they rise in May, with an average June to December gain of 5.4%, with positive returns 73% of the time. And again, that's bespoke is the source. So, seasonality isn't particularly worrisome. It's the election, it's geopolitical uncertainty. We could see oil price surge depending on, what goes on in the Middle East. But all this, like you said, it goes back to your beautiful point of diversification, pick your spots, have a well thought out plan. That's what it comes down to at the end of the day. There's always something going on out there, right?
Yeah, and we talked last. I mean, again, and there's other diversification. We talked about the correlation right now, the stock market and the bond market. That's why we've
Mhm.
been adding lots of alternatives.
Yep.
Other things that are less correlated. To those to stocks and bonds. Really important again in a balance to make sure you got uncorrelated investments, and that's what we're trying to work through too with our clients. So, yeah, it's a great time. Always a great time to be alive.
Yep.
It's fun to see. Keeps you on your knees praying, and also at the same time, it's nice to make money if you're invested in, especially in the markets right now. Ask anybody who owns Nvidia, right, or
Yeah.
those types of things. But or GameStop,
Yeah. Roaring kitty.
yeah,
Exactly.
Roaring Kitty, right? So
Down
that
big
stuff makes
today.
me nervous, dude. When those guys start popping up and the meme thing, I'm like, oh boy, here, but yeah, but it's isolated some of those
It's a
stocks.
craze. And yeah, again, that's a company, like you said, it's a meme stock. This guy made hundreds of millions of dollars on this to try to stick it to the big Wall Street guy. And now, there's could be manipulation on the other side. There could be some regulatory oversight because he's such a big market mover now, because he's got over $120 million in call options at $20 a share
Hmm.
is the exercise price. So,
Wow.
he exercises that. That's a big market movement right there in itself. So is there going to be oversight? Are there going to be brokerage firms that kind of shut them out? and all that to be seen. But again, earnings will drive long-term stock price. GameStop's earnings came out early. They actually released them early because of all this stuff. The sales were down 29%. So, you know, not the greatest, financials when looking at GameStop. Could they bounce back?
Yeah,
Absolutely.
yeah,
Whole
yeah.
nother conversation, but
That's the one.
stick to the companies that have growing and consistent revenue streams, grow their dividends, pay back their shareholders, invest in innovation and growth. Again, there's plenty of names out there to
Hmm.
not get caught up in crazes, but you know, even you can make money in Vegas if you go put money on black and in craps or whatever, or roulette. Again, I don't do that, but
I don't either. And this
I don't even
isn't.
know the right name of the game, but
Yeah. And this isn't
it's
bad. I mean, yeah, the meme stocks are, I think that's a
yeah,
gambling. And there's some stocks right now that are, I think a lot of people are manipulating game. But the reality is, if you invest in good companies that have earnings, like you said, I mean,
hmm
you're actually a stock owner at that point, or
yep,
you're a borrower, or you're a loaner through bonds. So
yep,
again, doing both of those, you don't have to be super aggressive to participate in this. It's, yeah, we're still high on bonds too. I think bonds fit. You don't want to forget. I mean, it's been kind of back to my point about the guy that he wasn't right about it. I mean, he's an unbelievably long. It wasn't. Now all the bond managers, a lot of them have had to kind of reassess and where we're going
yep,
now. So
yep.
I guess we can't. It's all good, man. It's all good. Just stay in the game, but be diversified. That's key.
Good. All right, guys. Well, we'll see you next week on the closing bell. Thanks for joining us. Have a good one.